Yeah, welcome, ladies and gentlemen. That's the pre-welcome. We are maybe 1 minute too early, but we know we are Swiss German. I want to, welcome you all for this new virtual roadshow with Treasury Metals. And we have Greg Farron here, who is the CEO of the company. And Greg will give us in 2-3 minutes beautiful insight into his company. And as most of you are aware, they also did a big deal with First Mining Gold, putting together their adjacent neighboring properties where we see a lot of synergy effects. And first of all, before we start, I want to welcome Greg, of course, also here in Toronto. Good morning.
Yeah, good morning or good afternoon for you. Very nice to see you again. I hope you're well, enjoying the summer.
Absolutely. Thank you very much. Yeah, actually, we have like 32 degrees outside here, and it's a bit tricky without an AC. So if you see me using this from time to time, it's needed.
Yeah, we're having great weather here as well. Nice and hot.
Super, fantastic, like that. And yeah, Greg, until we wait until everybody checks in here, this might take another 1 or 2 minutes. Maybe can you give us some thoughts onto the gold price, the silver price, meaning the precious metal markets where you are in, from your private perspective, if you like?
Yeah, sure, be happy to. Yeah, it's been a very long road to get here, but it feels like we're just at the early stages of a bull market in gold, and in particular for the juniors. I noticed about a month ago, another wave of capital returning to this into the junior sector. So I think that's really, there was a few outliers that were doing very well before that, but now things are really starting to open up and money's moving down from the producers into the developers. So that's why the timing of this acquisition is fantastic, to double our resource size, and it'll be much easier to access capital to develop the project further. And for the gold price, what I see is you're seeing these nice big moves, and then you're expecting a pullback, but it just trades down to the resistance and then hits another new high. And it looks like now that it's through 1800, it's probably going to quickly move now into an all-time high of 1900. I think on June. The second quarter, the June 30th quarter, I think that was the highest quarterly close for gold in either ever or in quite a long time. So yeah, I feel very good. I mean, in Toronto, you're really starting to see the equity financings open up. So a lot of bought deals, including the 11 million financing we just closed yesterday. So that's a big sign that generalist capital is returning when you start seeing these large bought deals being done by producers or developers for 50 or 100 million. And you're seeing several of those a week now. And I think the M&A to me has been fairly active. We're selling a property to Platinum, for example, and we just acquired the project from First Mining. So M&A is starting to increase as well. I still think it's very, very early stages though, in terms of more consolidation. I think the mid tiers are busy dealing with COVID, and probably their business development people are looking at projects. But I think the acquisitions will really pick up next year.
Whoops, that was a bit too early. Yeah, super, great. Yeah, thank you very much for those thoughts. We will check in 1 minute into the presentation. Then I put that up for you. Before we start that, just for everybody that you know it, first of all, very important, we are complying fully to the European security data laws, also especially to Switzerland. So no names will be shown, no email addresses nor anything else. Everybody is really anonymous here. And also, secondly, I urge you please to use the chat function, which is the third button in the gray vertical bar. You see that next to your to our two pictures here. It's called chat function. I just welcomed everybody, and please feel free to put in questions here, which we will discuss after Greg's presentation. Okay, Greg, I will set up here the presentation now, and I would say the floor is yours. Welcome. Thank you.
Yeah, thank you. And welcome, everyone. Good afternoon in Europe, and good morning in North America. Johan, always a pleasure seeing you. We've been on the road together a few times over the years, and it's very convenient to be doing this online. I'm actually up north for a few days, which is a beautiful part of the world, being on a lake and enjoying the weather, although I've been working the entire time. As mentioned, yesterday we announced and closed $11.5 million bought deal financing. So we're thrilled to have that capital, which we put to good work over the next 6 to 12 months. And I'll talk a bit about where those proceeds are going to be invested and how we're going to create additional shareholder value. And I'm also thrilled today to be talking to your audience for the first time about the acquisition we're doing with First Mining. We've come up with quite a clever strategic transaction with them. It took over a year for the transaction to be completed. So we're thrilled to be through due diligence and announce that. And there will be a shareholder vote in a couple weeks. And following that, the transaction will close. And by acquiring the Goldlund Gold Project from First Mining, we're creating over a 3 million ounce development project in Canada with a permit on the Trans-Canada Highway, and we're consolidating and creating a new district in Canada, which I'll expand on. So just let me move forward here.
It's below next. It's hard to see. It's on the bottom in the middle.
Yeah. Oh yeah, there it is. Sorry. Okay.
Yeah.
And there's a forward-looking statement there. Just as a reminder, the Goldlund transaction is subject to a shareholder vote in early August. And so what I'm going to do first is just a quick recap on the Goliath Gold Project and Treasury Metals sort of before the acquisition, and then I'll get into the merits of the acquisition and then the plans moving forward to integrate the two projects. So Treasury is a premier gold developer. We had excellent infrastructure right on the Trans-Canada Highway, access to power, skilled labor, which I'll expand on later. We had done a number of economic studies. The project's got very strong economics, so I'll talk a bit about that in the next slide. The last several years, we've been working on the mine permit, and in September of last year, the federal government announced the decision that the project can proceed into that construction phase, as you can see on that second point, and we have the permission to proceed into that next round of permitting into the construction phase. We had a 1.5 million ounce resource. Most of that was in the M&I category. The reason why we wanted to make this acquisition from Goldlund is there was a number of synergies. It also increases our open pit production and more than doubles our resource. So the focus over the last several years have been getting that permitting done, getting the project through the feasibility, and getting the resource drilled off to the M&I category. So now what's happening is we're going to be switching to integrating the Goldlund project, expansion drilling, but we'll continue bringing that combined project through to the construction decision phase. And the other thing we've been doing in the background is looking at regional consolidation opportunities. There are a number of projects in the districts. We thought once we received that permit to build a mill and tailing facility, we thought it made a lot of sense to look at acquiring projects that could be potentially processed through this mill and tailing facility. And we're thrilled that we're able to get this deal done with First Mining because it's the largest resource, it's the most advanced project in the district, and it's the closest to us, as you'll see on the next slide. Okay, moving ahead here. So just a recap before I get into the acquisition. This is the PEA we did in 2017. We've since been working on a feasibility, which I'll talk a bit about next. So the project is an open pit at Goliath. We envisioned about 2,500 tons per day. In year 3, the cash flow from the open pit would develop the underground because it is an underground mine. And then you'd produce on average of about 100,000 ounces for about 12 years. The initial capital to build a mill and tailings facility was quite low, 130 million Canadian, and then with an all-in cost of around 600. And then on the pre-feasibility, we're working with Ausenco, was leading that work with RPM and Mining Plus out of Vancouver. And the big changes there, I think, were you saw an increase in the overall all-in cost for the underground had increased, but the grade, the tonnage remained quite similar. And now what we're going to do is we're going to integrate doing a combined economic study using that pre-feas data, but integrating that second open pit at Goldlund. So I'll talk a bit about that later in the presentation. And the nice thing about the pre-feas, we haven't seen a big change in the initial capital, which is important, and which we always are now going to be building a larger mill with the second project. So this slide just gives you an idea of the region we're in. The image on the right, this is northwestern Ontario. On the bottom is the U.S. border. There's a number of producing mines in the district, including the Red Lake camp and the newest project to go in production, Pure Gold. As you can see, we're located right in the middle of that greenstone belt, and it's not economic. It's too far to be shipping ore to these other operating projects. So that's why we began the permitting over 5 years ago. We put about $10 million in the environmental permitting, the community work, to get that approval to build a mill and tailing facility for up to 5,000 tons per day. So once that decision was announced in September of last year, we started looking at this regional opportunities. As you can see, there's a number of projects in our area, and we were thrilled that we're able to get the Goldlund acquisition done. And as you can see in the smaller image, on the left-hand side, that really tells the story. You've got the Goliath project directly on the Trans-Canada Highway. So you've got the infrastructure, you've got rail, power, natural gas. You've got a highway, a paved highway. You've got a town about 15 kilometers away called Dryden. It's a hub for the entire district. So you've got a lot of good services there, mining equipment services, skilled labor, hospitals. There's a college that trains First Nations employment, which is obviously very important. And then we've got quite a large land package, 50 square kilometers, although it looks quite small in comparison to the Goldlund project. So by consolidating that, we've now got over 300 square kilometers on the Trans-Canada Highway, over 3 million ounces. The resources are about 25 kilometers apart. We've now since staked the ground between the two projects, so there could be ways to look at putting in infrastructure to transport the ore across the properties to where the mill will be at the Goliath project. You can see there's also a Highway 72. That's another option in terms of trucking the ore from the Goldlund resource down to the mill and tailing facility that'll be proposed to be built at Goliath. So that really tells the story there in terms of why we did the acquisition. We think, one thing we've been told by some of the mid-tiers is they obviously like the jurisdiction, they like the location in Ontario, they like the infrastructure, but if we can get, they're not going to get in the middle of trying to consolidate these two projects. Get it done yourself, get a combined economic study out, continue to advance the project. And we think now with this acquisition, the company is definitely a takeover candidate as we develop the project further. So just why do we do the acquisition? I talked a bit about the consolidation and how there's going to be co-development opportunities between the two projects. It obviously gives us a much larger resource, a much larger land package. So now we've got over 3 million ounces, and of which more than 2 million of those 3 are in the open pit. So that's going to have a big impact on the combined operation in terms of larger production profile, lower costs, and a de-risk our underground. And because we always felt that our underground was very robust and has a lot of potential to expand, but you're better to get cash flow from the operation to begin drilling and expanding that resource at depth. And then you also don't have to push the underground too hard. If the optimal size is say 1,200 tons per day, you don't have to worry about pushing it to 1,500 or 1,800 tons per day because you've got the ore coming from the two open pits. So another big point, obviously, is some of the operational synergies I'll talk a bit about later in terms of using one mill. With the Goldlund project, the other thing we really liked about it is the potential to expand the resource. Goliath has a lot of potential at depth and along strike, but now we get this much larger open pit resource at surface, which is only 25 kilometers away. But we believe on their property package there's a lot of potential to expand along strike of Goldlund and at depth. And then further along the land package, there's another open pit called Miller. So that would be sort of the third open pit to potentially feed the mill at Goliath. And then also just, we've seen our shares trade very well since the announcement. We're up about 50%. The stock's trading very liquid in several markets across Germany now, in the US, and on the TSX. We're trading well over 1 million shares a day. So we're starting to increase that institutional ownership is what we expected. And, we think with the acquisition as well, you'll have better opportunities for strategic capital and project financing as well. So I talked a bit about the benefits to the Treasury shareholders in terms of the increased scale, that access to open pit resources, better positioning with investors. And the reason why First Mining wanted to sell the project is obviously they saw those synergies. By putting the two projects together, there's about a 50 million capital saving had we continued to develop the two projects independently. because you don't have to do as much drilling to get the resources larger to attract the project financing. You don't have to have the dual permitting process. And so that's what they saw is a lot of cost savings by integrating the projects. Obviously, our EA, the ability to have a permit, is very important in Canada. It's not easy to get a permit nowadays to build a mill or tailings facility. So they saw a lot of value in that. And they're unlocking this project, which is in a portfolio of other projects. And they're now going to be able to focus on their Spring Pole project, which is just further north of us. So again, just on the synergies of the transaction, I talked a bit about the larger resource and that open pit production and that huge land package we now have. The metallurgy does work, so there will be one mill that you can process both of the ore. That's what we're proposing to do. Obviously, there's going to have to be some regulatory approvals with the balance of the permitting that's left. So we'll have to manage that very closely. The lower cost, I talked a bit about that, having that larger open pit production. You can de-risk the underground, and there's better economics at scale building a larger mill. So we were proposing to build a 2,500 ton per day mill. Now we're proposing with the current resources about 5,000 tons per day, although we do believe, which I'll get into later, once you get into the expansion drilling on this project, you'll probably get into a much larger project, which would require a further amendment to the permit to increase the mill size down the road, which is not uncommon in Canada. And the other big synergy is the permitting. We're through the federal EA. We were about to get into the provincial permitting, so things like power, health and safety permits. So obviously now we're going to integrate the Goldlund project into that permitting, although they're not going to have to build a mill and tailing facility, so it'll be quite a different process. They still have to do baseline data, and they're going to have to permit an open pit and some roads. But it'll be quite different than what we've gone through over the last 5 years. And then, of course, there's obviously some G&A savings, and you're dealing with the same First Nations, the same community, the same skilled labor. So there's the same benefits to the local community, just on a bigger scale. So there is good support for the project going forward. So this is just I guess a case study of Atlantic Gold, and something that a success story in Canada with a very similar project. They were out in the East Coast. Ultimately, they put it in production. I think it was about 2016, 2017. They started around 80,000 per ounces, and then they increased it to 200,000 ounces, and ultimately they were sold to an Australian producer. And what's similar is this hub and spoke strategy that we're going to be using. A couple big differences, though, is the Goliath is going to have the two open pits, and the second open pit, Goldlund, is much closer than the Beaver Dam project that they had. And we also have an underground, which they didn't have, which is right actually at the hub, of course, and that's got the higher grade ore, which they didn't have. And even our open pits have a higher grade than their projects. But this gives you an idea of how they integrated the different resources into the same mill, and was able to create a lot of shareholder value. So just in terms of our valuation, I think there's a lot of upside as we close the acquisition in early August, as we get out and market the combined project. It is going to get re-rated. I think when we get that first economic study out by the end of this year, you'll see a much larger production profile. We don't know the exact number, but it's going to easily be over 125 to 150 is what we're targeting. A 15-year mine life. That's just based on the current resources in the measured indicated category. We do think as we get out expansion drilling this year and into next year, there'll be a lot of potential to expand the overall resource. But these are some good peers here. As you can see, we're trading at quite a big discount. So the market is starting to price in the larger resources mentioned. The stock's traded up now to a combined market cap of over 150 million. We just closed the bought deal financing, but we're still trading at a significant discount to our peers. Our PNAV, we're probably trading at about a 0.25 of the combined project. So there's a potential doubling there just to trade in line with our peers. And then our market cap, again, is easily another double to get in line with the peer average. So just walking through the terms of the structure. So we're buying a sub from First Mining that owns the Goldlund project. We're going to issue 130 million shares of Treasury, some warrants as well. they're going to be getting a royalty on the Goldlund project and a production payment in several years worth about 5 million Canadian. And the plan will be that they're going to issue these shares to their shareholders in 12 months from closing. And the reason we wanted to have that pause there is just to give the time for the market to absorb the transaction, for us to get the combined economic study out, which is going to show a much more robust project than what Treasury has today. And then a lot of news flow over the next year in terms of drilling and different appointments we're going to make in terms of beefing up the operational mine building team. So then when their shareholders receive these shares, they're going to have a good understanding of the asset. And I think that's going to create a lot of value. It's going to broaden our shareholder base significantly. They've got quite a large shareholder base in the US that we don't have. First Mining is going to be entitled to 3 directors of 7. And as they dividend those shares, that participation could decrease. For example, if they dividend all the shares, they would have no board representation. If they distribute and keep 10%, they'll be entitled to one director. Yeah, and then just looking at the capital structure, so we currently have 170 million shares now, and then we're going to be issuing those 130 million shares to First Mining. That'll leave us with 300 million shares. We're going to do a share consolidation, so we'll have about 100 million shares issued. We're currently trading around 50-60 cents, so we'll be trading around $1.50, $2 range. We'll have about 175 million market cap. As mentioned yesterday, we closed an $11 million bought deal financing, so that funds the work going ahead. We're quite excited about some of the strategic shareholders we picked up in that financing. It went to almost all new investors, which is great, and about 80% of it went to institutional shareholders. We're covered by PI and Haywood, and I expect that coverage to continue to increase with this new company and the larger resource. We do have quite a large institutional shareholder and retail base in Europe. Currently, about 50% of Treasury's shareholders are in Europe now, mainly in Switzerland and France and Germany as well. A lot of that's been the work that we've done together over the years. And then insiders own about 6% of the pro forma company, management and board. Yeah, so how are we going to integrate the 2 projects? So, they're going to be running on sort of a separate permitting path and a separate development path, but there will be the ultimate goal of having a combined feasibility on the 2 projects, as you can see in the middle track in blue, and then there'll be a combined operation in the future. So the first thing we're going to do is that we were doing a pre-feasibility, so we're going to take that information and integrate the Goldlund resource and do a combined economic study to a PEA level. That'll be issued this year, and that'll give the market the first idea of what the new capital will look like, what the new operating costs will be, what the new production profile will be, and changes to the initial capital, for example. And then that'll allow us to get into the construction permitting at Goliath, into the project financing discussions next year, with a decision to make a construction decision towards the end of next year or into the following year. Then the idea would be to develop the open pit at Goliath. The cash flow from the open pit will then fund the underground almost immediately. So because we're going to be feeding a larger mill than we had proposed in the past. And then you'll have the underground production kick in. And then at that point, within a couple of years, you'll have the Goldlund project will be completed, its permitting. So you'll be able to bring on the larger Goldlund open pit, and you'll have mined out the Goliath open pit first, and then you'll be blending the Goldlund open pit ore with the underground ore at Goliath. And then the Goldlund track, what's going to happen there is we've already started baselines on their project. We need to do that for about a year, and then that'll allow us to get into the permitting regime for their project, which will be on a separate permitting path. And then you'll get into the construction and then operations at Goldlund. And at the same time, all the economic studies will be done on a combined basis. So we'll start with the PEA this year, and then we'll move into the feasibility next year. On the drilling side, we're going to do about 25,000 meters of drilling from the financing we just closed. So that first thing we're going to be doing this year is in September, we'll get a couple rigs going We'll be doing some conversion, infill conversion at Goldlund. And then that'll allow their resource to get ready for feasibility next year. And then we'll shift to some expansion drilling. And why don't I just spend a few minutes talking about, where we would drill and where we see the upside on the two projects. A little slow here, moving the slides ahead here. There's the proposed open pit at Goliath and the mill just in the bottom corner there. So, the obvious area we see potential at Goliath is drilling at depth. We believe these high-grade shoots are open at depth and a lot of potential to expand that. And this new C-zone we discovered in our spring drilling over the last year. There's also another area where you could add a second underground zone as well. So, but the idea would be to build the project and use the cash flow to expand that underground. So that'll come later in terms of expansion drilling. In the shorter term on our property package, you see that's about a 10-kilometer strike length. You can see we've discovered very similar looking open pit resource potential along strike, both in that nose fold and in the far east area. You can see from that soil sampling work we've done over the last couple of years, there's very similar looking near surface resource potential, and we have had some success out there. So that would be the most obvious expansion area for Goliath. We do believe that there is a second open pit in our property package. So that's going to become a bigger priority next year when you get out doing the expansion drilling. And then at Goldlund, here's a snapshot of their open pit shells. So that where we think is the top priority in terms of the initial expansion. Obviously, you've got the M&I drilling you need to do to convert that inferred. But the second thing is there's a number of zones. Zone 2 and 3, we just announced some results this week where they're already expanding the size, adding inferred ounces there. So that's the obvious expansion area, is that surface along Goldlund. The second area is at depth. This was a former producer in the 80s in the underground, so there is underground potential, but they haven't been looking at that. They've been looking at the near surface potential. So that's another area of growth as well. And then further along strike, they've got that huge land package. It's over 300 square kilometers now. About 10 kilometers from Goldlund, there's another open pit developing there called the Miller Prospect. There's a small resource now on that. And so there's a lot of potential to expand that along strike as well. So that would be sort of the obvious areas of expansion going forward. So there's certainly no shortage of areas to grow the resource. And, like I mentioned in the introduction, Treasury's strategy over the last several years have been to get the permitting done, get this through feasibility, and get that 80 to 100,000 ounce producer in production. Or at the same time, we were looking for consolidation opportunities. So we've now done that consolidation. So the strategy going forward will switch to one. We'll be moving this through the combined project, through the permitting feasibility to get to a construction decision by the end of next year. And then the second thing will be now switching away from the infill drilling, the conversion of M&I to more expansion drilling, because there's a real possibility you can get this resource into that 5 million ounce category by the combined project, which I think would be attractive for a number of reasons. Obviously, a takeover potential with our jurisdiction in Ontario, and then just being able to get a production profile, say something closer to 200 or 250,000 ounces would be, much more interesting to the institutional investors. So just to close up here on the timeline, so I'll just quickly run through that again because I know it's a little confusing talking about the two projects. So the Goldlund project, so we've consolidated that now. We've already begun the baseline permitting work at Goldlund because they're several years behind where we are. So we need to get them caught up into the production timeline. Treasury will complete a combined economic study by the end of the year on the two projects. So we're quite excited about getting those numbers out to the market. That'll allow us then to begin our construction permitting for Goliath and the mill and tailings facility. So things like power, health and safety permit, with a goal by the end of next year of having both projects to a feasibility level, and then a project financing discussions and a construction decision toward the end of next year, or into 22. And then you get into a construction phase with the open pit and the underground at Goliath. And then after you've completed the the regulatory permitting of Goldlund, you'd have that project coming on sort of year 2, year 3 after the Goliath project is in production. And then the drilling going forward is going to be about 25,000 meters. About the first 15,000 of that will be the conversion of the Goldlund project into the M&I category, and then the balance will get into the expansion drilling at Goldlund and Goliath. And we're just designing that program now. The financing's closed, and you can expect the rigs to start in September on both projects. So just to quickly recap, and then happy to take a few questions. The consolidation creates one of the largest, most advanced development projects in Canada. We're in a great jurisdiction. In Northwestern Ontario alone, there's 4 gold producing projects. We're in a great jurisdiction in terms of permitting, working with the First Nations and our partners going forward. Lots of infrastructure, lots of skilled labor. The nice thing about the project with that infrastructure, it's a very low capital project because you're right on the Trans-Canada Highway. You don't need to build camps. You don't need to put it in roads. You don't need to put power lines. All that infrastructure is right there, and that's the reason why the capital is kept so low. We thought we had a lot of exploration potential previously to this acquisition, both at depth and along strike at Goliath, but now we've got that 300 square kilometer land package, so there's even more exploration potential. There's about a 65 kilometer strike length now, so there's a lot of potential to find additional open pits. My view is there's probably 3 to 4 additional open pits on that land package, at least one on Goliath, and then you've got the Goldlund open pit, and then you've got the Miller potential as well. So a lot of potential to increase the overall size of the project, and then we're still trading at a very attractive valuation compared to our peers. The stock's trading very liquid the last several months. We've added a number of new institutional investors in the market and in the financing. I think you can expect analyst coverage and strategic investments to happen over the next year. So, it's a very exciting time for our shareholders. And I still think there's a lot of value because the market hasn't priced in this acquisition yet. And I just think there's a lot of value in terms of where we are with the gold market. I think we're, very early stages. We're probably in sort of the second phase of whatever, a number of, 10 phases of the gold price increasing, the junior market coming back into favor and getting property value. So I think it's very early in that recovery. And I think you can expect later in the summer or into the fall, probably another wave of capital moving back into the sector that should put the valuations much higher than where they are today. Because we're still trading at, say $40 an ounce, $50 an ounce in many cases, with gold trading in Canadian dollar terms. I can't remember what it is now. It's about $2,400, $2,500.
Easy, yeah.
You're trading at $40, $50 an ounce. So there's still a lot of upside. And as the producers get more expensive, obviously that money is going to continue to move down to the developers and then the exploration companies. So very exciting time, and happy to take any questions.
Fantastic, Greg. Thank you very much. Let me stop that here. Now the people can see us better. There are a lot of questions actually. And also we got some questions here in French. Just let me see. Je vais traduire les questions en français en anglais. Huh? Okay, guys. So let's get started. First of all, there was a question about the potential of the exploration for the Goldlund project. Can you comment a little bit more on that? Where do you see that? I mean, you already said some stuff that you see at least one open pit, but maybe you go a little bit more into detail.
Yeah, so they have a 1.7 million ounce resource now. It's all at surface. If you saw the drill results we announced this week, I mean, where they're drilling now, these new zones, is very shallow. It's within the first 100 meters. So there's a lot of potential just in that resource area. That's probably the highest potential area to expand along strike at surface. So that's very important. So, there's a number of zones right now that we need to convert to the M&I category and then expand as well. And hopefully we'll have success expanding. So that's the highest priority area right there because it's it's at surface. You want to find more open pit if you can. There is underground potential at Goldlund, but I don't see that becoming a big focus, at least in the short term. The second key area on the Goldlund property is that Miller open pit, which is 10 kilometers along strike. So that'll be an area of expansion drilling next year. And then at Goliath, as mentioned, we've got that new C zone we discovered, which is quite interesting. That could add to the underground production, and that itself is not very deep. We were drilling 300-400 meters below surface, so that could increase the underground production. And then a long strike at Goliath. Teck had a number of high grade hits. We had a number of high grade hits, 10 kilometers along strike. So we'd like to follow up with that. Now that we've done the IP work and the soil sample work, you have a lot of data to generate targets, and then next year you'll be able to get out and drill. And the most important thing is just the improving overall market, the improving valuation. It allow companies to access capital and not be as dilutive as it had been in the past. So there really will be a lot of potential. And you're seeing that in the market now. I mean, the market is paying for discoveries. They're wanting to put more capital into projects that can expand resources. So now we're going to have that access to that capital, which we hadn't in the past, for a number of reasons, many market conditions. So, you're going to lead to a number of discoveries, which is just going to create more and more value and increase the shareholder price, and that'll allow us to access more capital to continue to expand the resources. So it's a great position to be in, to have this kind of scale of a project that's already got very developed resources, but a lot of potential to expand those resources in that immediate area, but also along strike.
Okay, super. Then next question, also from Fernando. Do you want to monetize probably, let's say, parts of the property or parts of the project you don't need? Or do you say, it's all so fantastic, no, we keep everything?
Yeah, well, it's a good point. I mean, I guess you could consider doing like a joint venture of a portion of the project, but I think it makes sense to keep the combined larger projects together, have 100% ownership, because if you are going to look to a sale down the road to, say, a mid-tier, within 12 to 18 months, you probably want to wait to get that combined economic study out, to get the projects further permitted, to show the potential to expand the resource, and then look at a sale at that point. So I think you wouldn't want to sell any of the properties at this point. You may even look at consolidate. There's other projects in the district you could actually look at buying, because you could further consolidate that camp. Because the mid tiers, the one thing they've told us, in particular the Australian producers, they want to have a huge land package, because they want to be able to get out and explore and look for additional discoveries in 10, 20 years down the road. So I think it's important you keep that combined project together. The one thing we may do is Treasury has some non-core assets, so we could look to sell some of those projects. We're actually in the process right now of selling a project we have in Timmins to a company called Platnex. They've got a much larger land package and a much more advanced project. So we're selling an early stage project in the Timmins camp to them, and we'll become an equity holder. So that's something you could see us doing with our non-core assets, but we'll definitely want to keep that Goliath Goldlund together.
Yeah, that makes also really sense to me, honestly. Question from Anupam. How deep is your underground resource by now, and how deep do you think it can go down? Yeah.
Okay. Well, the Goliath, it's very shallow for underground mines in Canada, as many up in Red Lake, which is north of us. They're a kilometer or deeper. Same thing in Timmins as well. So our resource is quite shallow. We've drilled the open pit down to about 150 meters, and then the underground starts below the open pit, and we've drilled down to about 500 meters in the measured indicated category, and then we've drilled another 100 meters below that with some inferred ounces. So we did do an IP survey this winter, and what that does is that helps identify the extension potential where you would drill of these underground chutes in our project, and it showed very clearly that these are they can be expanded or extended both along strike and at depth, at least 200 to 300 meters below the 500 meter level. So, I mean, typically these projects go down several kilometers. So, and once you get drilling from the underground, it's much easier to drill from the underground than from the surface, is what we're doing today, because that's quite deep to be drilling 600-700 meters from surface. Although we do always hit the zones in every hole. So we have a good handle on that expansion potential, but you're better to use cash flow from the operation to really drill. And what's going to happen when you start drilling at the 800 to 1,000 meters, you're probably going to find new zones. You're probably going to find higher grade ore. So there is a lot of potential in the underground at Goliath.
There's also another question in French, which I will translate. Do you see any risk that the deal with First Mining is not going through? Is it possible that shareholders will not vote for it? Do you see that? I mean, if I look at your shareholder base, and I think you need probably a simple majority to bring the deal through, like 50.1%, right? So there shouldn't be a problem, right?
I don't believe there'll be any problem. I think it's going to be overwhelmingly 99% in favor. I mean, our share price has performed very well. So that's an indication of since we've announced the deal, we're up more than 100%. One of the conditions was getting the company property finance. So we've done that yesterday with closing that transaction. So that's why that was important. And, I talked closely with all of our major shareholders, and they're all very supportive of the transaction. So it's definitely going to go ahead, and the vote is on August 5th. And you actually do need 66 2/3 to vote in favor for the acquisition. So no, I see no reason why it won't be approved.
Okay, super. Then there is a connecting question with that. Who are the 23% First Mining shareholders? Are they retailers, institutions, or something else? The question refers to page 12 from Michael from Munich.
Yeah, okay. Good question. So the First Mining, they will be issued those shares on closing, so in early August. And the plan is they're going to hold the entire tranche of shares, as mentioned, for the first year. Just to give us a time to create a lot of value, develop the project further, and then they're going to dividend those shares to their shareholders. So they'll set a record date in a year's time or whenever, and then they'll dividend those shares. They may retain an interest themselves, the parent company, First Mining, so they can retain up to 19.9%, and then the balance will be dividended out. So their shareholder base is quite a broad shareholder base. I've been told they've got roughly 50% ownership in the U.S., so a lot of retail, a lot of high net investors. They've done a very good job expanding their shareholder base in the U.S., which we don't have. We're very concentrated in Europe and Canada. We've got a couple large institutions in the U.S., so we'll definitely benefit from that bigger, deeper retail base in First Mining. So that's another big benefit of the transaction is once they do that dividend, there'll be a lot more liquidity in the stock and a much deeper shareholder base as well. And at the same time, because of the acquisition, I think we're going to be adding a lot of new institutions as well. So it's going to be a very nice looking shareholder base in 12 to 18 months from today. So I don't know if that answers your question, but that 20-something% is going to be the shares that they're going to dividend to their shareholders. Now, they may dividend the entire amount. It's up to them. Or they may dividend a portion of it and keep 10-15%.
Okay, so that was great to clarify that, because I think that's really important. There is another question from Anupam. As you mentioned, Atlantic Gold as a case study, and you are comparing a little bit Treasury metals with them. What were the grades for Atlantic Gold's resource? Do you know that?
Yeah, well,
okay.
I know I can tell you our grades are coming in on the Goliath open pit. It depends how much of the resource you want to mine and how low of a stripping ratio you want to have. But the Goliath open pit's just over 2 grams right now, about 2.25. The Goldlund open pit, it's around 2 grams as well. So it's fairly attractive grades for Ontario open pits. And the Atlantic Gold, I don't know the exact number, but my guess it was close to about 1.5. And then the other difference is, don't forget, we're going to be blending that 5-gram underground ore that we have as well. So our average would be, with the 2 open pits, would be closer to 2.5 to 3 grams, is what I would speculate what the combined economic study will show. So that's probably double the grade of what you had at the Atlantic Gold project.
Okay, great. There is another question to the valuation of Treasury metals by now, and I fully agree. At 57 cents, it's really quite undervalued. And Michelle is saying that the intrinsic value is closer to $1, $1.30. So probably it is still at that price because you just closed the financing, right?
Yeah. So it's a good question. I mean, maybe if you look at, and don't forget, all of our economic studies in the past have been based on gold at 1,200, 1,300. So if you start using more realistic gold price today, like say $1,500 gold price, or even a $1,600 gold price, it's a tough question to answer, because if I just look at the Goliath economic study, I mean, we should be trading at $1. That would put us at about 50% of our net asset value, around $1. But then when you put in the combined project, that NPV is going to be, who knows what that's going to come out at this point. I don't want to speculate, say 800, 900 million with a fairly aggressive gold price, let's say. So we're trading at, then our market cap now is 100 million. You're trading at a fraction of that NPV. So that's why I do see a lot of upside, regardless of the gold price you use and regardless of how robust the economic study comes out. This should be trading at, my view, the stock should be trading at a couple dollars within 12 to 18 months. By the time the combined economic studies out and the company's property marketed and the institutional ownership increases.
Okay, super. Yeah, there's also a question for the combined PEA, but I think this is becoming more like a combined PFS now, right?
Yeah, well, I mean, Goliath has been done to a pre-feas level. The reason why we can't do a pre-feas initially on Goldlund is because they have, we want to use some of their inferred ounces, right? And there is some engineering and metallurgy work that you'd want to bring up to a feasibility level next year, but we think it's more important to get a combined economic study out sooner than a feasibility. So the simplest way to do that is through a PEA, because it allows you to use some inferred ounces. So, but the design of the mill and the tailings facility at Goliath will be done to a pre-feas level, because we need that level of engineering to begin our construction permitting. So yeah, but we're not able to call it a pre-feasibility because we're using some inferred ounces. So it's kind of a 43-101 issue. But next year, you would have had enough time to get the engineering advanced at Goldlund to a feasibility level like Goliath. And then you combine that.
So can we say for the, let's say, for the new PFS for Goliath, that might be by the end of the year?
Yeah.
To get a little bit more detailed?
We'll definitely have the combined economic study done, with Goliath done to a pre-feas level and Goldlund to a PEA level by the end of this year. That's what we're targeting. We're actually already doing some of the work on the resource and metallurgy and things like that.
Okay, there's then of course the normal question about COVID-19. Werner is asking that one of the reasons for the high gold price is the disaster in the US. Honestly, I think it's more a hype in the media, but anyhow, do you think that this disaster can flood over to Canada? I mean, it looks quite horrible, that's for sure, but we talk about 350 million people on the one hand, and on the other hand, if you do not have the measures what we have taken in Switzerland or Germany, then of course it's getting a little bit more tricky. I think the high gold price comes from the money printing, to be honest.
I agree. I mean, the gold price is just, I think it's just the investors are redesigning their portfolios, and gold is becoming a bigger percentage of those portfolios, both gold bullion, gold producers, and now the juniors. So I think that's what's driving the valuation, is the debt and money printing. Canada so far has been managing COVID quite well. I can't really speculate on if that'll continue. I can tell you the bigger cities like Toronto and Montreal, they're being very, very careful to keep the opening up quite slow, but things are opening back up with the economy. And there's been a number of producing mines in Ontario. Ontario is the largest gold producer in Canada, followed by Quebec. and as Canada is a top 10 gold producer. So I don't see issues with operations not being able to manage the COVID issue.
Yeah. Okay, super. So let's come back to the company here. Joachim from Munich wants to ask, can you say something about the ore structure at this stage? From, let's say, Goldlund and Goliath, is it identical for both projects, or are there differences? And meaning, of course, will you require a different processing, or can you process all together all in one?
Yeah. No, that's an important question. Typically, my colleague Mark Wheeler, head of our technical services, would answer that. He's been doing a lot of work on the metallurgy. Obviously, we've done metallurgy work prior to the acquisition, and that is one of the first things we're working on right now, is getting that project to a feasibility level in terms of metallurgy, like the Goliath project. They will process together. Their ore is a little bit harder. So meaning more grinding, higher costs, and the overall recoveries are 97% at Goliath. That's done to a feasibility level, and the Goldlund will come in probably closer to 92, 93. So there will be a slight decrease in the overall recovery rate, but they will work together, which is important. Yes. So you'll be able to use the same mill and tailings facility, and that kind of the actual design and flow sheet will be developed this year.
Fantastic. So as I saw also, just to connect with that question, as you have a hub and spoke strategy, this is like one milling, one processing facility which serves all, right?
That's
so
correct.
Do you intend to bring that, or to build that like in stages, that you say, okay, now first we have the open pit at Goliath, then we are developing Goldlund, then afterwards we have the underground at Goliath? So meaning, can you use the same facility from the capacity, or do you say, no, we just start with, let's say, the 2,500 tons per day or 2,000 tons per day, and then we have to maybe enlarge, or we can enlarge that to, let's say, 3,500 or 4,000 tons a day?
Yeah, I mean, the thinking right now is, because we've permitted for a larger mill and tailings facility than what the Goliath project can handle, is this economic study we're doing that we just talked about. That'll optimize and give us the right size mill for the current resources and the M&I measured indicated category. So that's going to come in somewhere between 4,000 to 5,000 tons per day, we believe. So we're going to go build a facility and mill for that size, and that'll handle the current resources. Obviously, that's still subject to regulatory approval, so there will have to be a permitting with Goliath, and then we have to permit the Goldlund open pit. So we're not fully done permitting by any means. But then it's very common in Canada, like in Timmins, you've seen, as you make more discoveries and expand the resources through exploration, you would then increase the size of the mill. So probably what will happen is you'll go build the 5,000 ton per day mill, and then with the cash flow, you find more, would do an upgrade to 8,000 to 10,000 per day in year 5, year 6. But that's a little bit further out to speculate on.
Yeah, of course, that's for sure. Yeah. Good. Where do you see the production rate for the combined project then per year? How many ounces do you think that's? I mean, it's really speculative, because you do not have the PEA for Goldlund, right? But just let's say a little bit blue sky.
Yeah,
hypothetical.
Well, I think that the initial economic study will be somewhere, but say between 125, 150 per year, 150,000 ounces per year for about 15 years. That's roughly where he'll come in. And then once you do expansion drilling and add ore and have success converting some of the inferred ounces at Goldlund, you could see an increase over time. And then the expansion drilling, it's very difficult to say how these zones, where we know there's ore, how successful they are in finding inferred ounces and then converting. But I mean, it wouldn't. And then you've also got the underground potential at Goliath, underground potential at Goldlund. I mean, there's no reason to think that this couldn't be a 250 to 300,000 ounce producer at some point. But that's going to require obviously a lot of success expanding.
Okay, super. Before we come to your current capital raise, there was still one part of a question open from my friend George from Zurich. As you said that First Mining will dividend out the shares. Are they doing the same with the warrants?
Yeah. Good question. Yeah, they will be dividending both the common shares. As mentioned, they can dividend the entire amount, or they can retain a position themselves, the parent First Mining, and they're going to dividend all the warrants as well, 100% of the warrants. Yeah.
Good, perfect. Let's come to your current financing. I mean, that's a lot of money, which is fantastic and puts you in a fantastic position. Can you say a little bit more on the use of the funds from the capital raising, meaning the expected allocation? And also, that's a question from my side, because I heard that Sun Valley participated in the capital raise, and also I think Gold 2000, Erich Meyer, whom I know very well. Here, he's my neighbor in where I have my office. And that is fantastic, and maybe you can give us some ideas who else participated, meaning for me it's important to know the new shareholders. Are they more, let's say, on the trader side, or are they long-term interested, meaning to develop really your company into production?
Yeah, I mean, one real strength of Treasury has always been our shareholder base. We've got a number of family offices in Europe. Some of them are on the call today. Like Olivier, Blaise, they've been very supportive, long-term shareholders. And then we had an institution in the US called Extract, who had been very supportive as well, very long-term. So with this financing, we added Sun Valley, which has a similar strategy, long-term. They typically get into this stage and are there to help with the project financing equity part as well. And that's the reason why that was important. And then in addition, I guess there was probably another 10, 15 new institutions. A couple of the institutional investors were existing shareholders. And then the balance went to some existing high net shareholders that have been long-term supporters of the company in Europe and in Canada. Yeah, so I'm not sure if that, I can't remember if that was your question or not, but
yeah, first of all, for the long term, and then where will the money go?
Oh yeah, sorry.
For what is it used?
Yeah, the money's going to go mainly through exploration. Is the biggest component of the budget. We're going to spend about $3 million this year, as mentioned, on Goldlund, on doing conversion of the resource, and then another couple million of that will go to expansion drilling next year. And then you're going to need about $1 million to complete that economic study I talked about, the first combined economic study. And then another $1 million of that will go through additional baseline engineering, metallurgy work, mainly at the Goldlund project, to get that to the level of advancement that Goliath is already at. There's very little capital really that needs to be spent on Goliath, other than obviously the feasibility work. And unless you want to get into expansion drilling, the resource is already in the M&I category, so there's very little conversion left to do. What you could do at Goliath is looking at expanding the underground or drilling along strike, but that'll become a bigger focus next year.
Great. So, when you are doing the DFS, there's a question about that, about the definitive feasibility study. Do you need to raise more money, or could you handle that also with the money you have now?
We'll probably will. I mean, it really depends on the valuation we have. If the share price continues to increase and the gold market continues to perform well, I think it makes a lot of sense to put capital into expansion drilling. For the long term, right? To get the resource larger. But if you didn't want to do that expansion drilling, I mean, we probably have sufficient funds now with this financing, and we've got a lot of money. We've got a fair number of warrants in the money as well. So we probably wouldn't need to finance again. You could, with the warrants and the existing cash position, you could probably do this combined study and get the feasibility done as well. So really, it'll come down to how much expansion drilling, the board decides.
Of course. Super. I mean, at Gold 2,500, who cares, right? Last question from my side. I saw that you still have the convertible debenture, which is due in November 2022. So there is still like a good 2 years to go. who is the holder of that, and what do you expect? What happened with that? Will it be converted, or let's say, what are the conditions?
Yeah, good question. So it's in the money right now. It's convertible at 32 cents. So that they're holding the convertible debenture. It's owned by Extract, who I'd mentioned earlier. They're also a large equity holder. So they're very supportive of working with us. I mean, if we want to pay it out, that's an option. I think what makes most sense is just to let it convert it over the next several years. And then another option would be, I'd imagine next year you're going to start getting offers from corporates to do a strategic investment, or even project financing discussions will be commenced. So if you end up taking on a strategic investor, you may pay it out at that point in time. So it's not really no longer an issue for us, because we've got the balance sheet in good shape with this financing. We've got warrants in the money, and and with the market cap now 120 million, a $4 million convertible debenture no longer looks like as big of an issue as it did, say, a year ago. Yeah.
Okay. Yeah, fantastic.
Well, hopefully that answers the question.
Yeah. How imminent do you see the risk of a takeover, especially when gold goes above the $2,000? I mean, you are one of the next great, fantastic quality projects in Ontario, meaning in the heart of one of the best mining jurisdictions in the world.
Yeah. Well, I mean, all I can say on that is we've got to close the acquisition in early August. I think things could get quite interesting almost immediately after that happens. I think the market will want to see that combined economic study out, and a clear development path going forward in terms of feasibility dates and permitting for Goldlund, and then something could happen. I mean, all I can say on that point is, over the last several years, we've done a good job just getting mid-tiers to the project, not necessarily signing CAs, but just getting them familiar with the team, seeing the infrastructure. So we have had, I'd say, 25 to 30 groups over the years up to the project. Not necessarily getting into the data room, just getting familiar with the project. And I know some of those groups have also looked at Goldlund as well. So, but yeah, I mean, I think it's a real possibility next year. The mid-tiers get more active. They haven't been that active yet with the developers, but yeah, I think it's a real possibility. Yeah,
that's right. But then hopefully at least at a super high premium and a much higher share price.
I hope so.
Great, super. Yeah, so from my side, no more questions. You answered everything I had here on my list. Also, let me check here again. No, that looks all fantastic. So, Greg, thank you very much. That was a fantastic 1 hour and 3 minutes. That's amazing. That's a lot. You see a lot of questions and a lot of interest into your project here. And I wish you definitely all the best. Please keep us posted with that good news going on. And we look forward then to your drills, of course, and hopefully to see you soon again, that we can have a chat personally and probably a nice gin tonic, because that is good against COVID,
Okay. I'll keep that in mind.
Super.
Right,
okay.
Have a great vacation next week, and keep in touch.
Yeah, thank you very much. Same to you. Yeah, ladies and gentlemen, that was our virtual roadshow with Treasury Metals and Greg Farron, the CEO. And you heard it. Fantastic company, fantastic project. We were telling this to the investors the last 5 years already. And glad for those who had the chance to invest cheap. I think this company is really ready for a re-rating and really ready to poised to go to at least to $1. This is also where the analyst targets are, around $1, $1.20 even. And we see a great development here. And as said, fantastic mining jurisdiction, fantastic setup, combined over 2.5, 3 million ounces at least, rising more and more. And we look forward to the pre-feasibility study of Goliath, and also then for the combined economic assessment of both projects. And I think the hub and spoke strategy they are doing is the real right way to really play this project. And let's see what happens. Gold is poised to go higher. My personal target was just lifted up, and short term I see gold at $1,910, and afterwards I think for next year I see $2,440. So it looks like a good move here. It looks like it makes sense to really have a look at quality stocks like Treasury Metals. Thanks for watching us. Thanks for participating. Stay healthy and, of course, enjoy your vacations. We will move on with our virtual roadshows then in the second half of August, beginning of September. And then let's see if we can meet personally, hopefully then in fall again. So thanks and bye-bye and take care. Greg, thank you very much.
Okay.
Bye-bye.
Yeah, thank you.
Thank
Take
you.
care.